Hello intelligent investors, this is Victor here. Costco stock is one of the best performing dividend growth stocks in the past 2 years. It even beat the S&P 500 index in the past 2 years during the pandemic as well as in the past 5 years. For example, in the past 2 years, Costco stock increased as much as 86% while the S&P 500 increased 45%. In the past 5 years, Costco stock increased 241% while the S&P 500 increased 107%. Obviously, past performance does not guarantee future results, so in this video I'm going to analyze Costco stock to see if it's one of the best dividend growth stocks for long-term investing. I will cover these topics in this video. First, Costco's business overview. You will learn about Costco's biggest competitive advantage and economic moats. Second, Costco's two biggest long-term growth catalysts. Third, Costco's biggest risk you must know. Fourth, Costco stock valuation. You will learn about how to calculate Costco's fair intrinsic value so you know whether Costco stock is overvalued, fairly valued, or undervalued now. Fifth, will I buy Costco stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over $1 million. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. Before investing in any stocks, it's always important to understand the business first because investing in stocks is the same as investing in a business if you're a long-term investor. So what is Costco's business model and how does Costco make money? This is from Costco's latest annual report explaining Costco's business model. We operate membership warehouses and e-commerce websites based on the concept that offering our members low prices on a limited selection of nationally branded and private label products in a wide range of categories will produce high sales volumes and rapid inventory turnover. When combined with the operating efficiencies achieved by volume purchasing, efficient distribution, and reduced handling of merchandise in no-frills self-service warehouse facilities, these volumes and turnover enable us to operate profitably at significantly lower gross margins than most other retailers. We generally sell inventory before we are required to pay for it, even while taking advantage of early payment discounts. We buy most of our merchandise directly from manufacturers and route it to cross-docking consolidation points, depots, or directly to our warehouses. Our depots receive large shipments from manufacturers and quickly ship these goods to warehouses. This process creates freight volume and handling efficiencies, lowering costs associated with traditional multi-step distribution channels. At the time of making this video, Costco has 828 warehouses worldwide, 572 warehouses in the US and Puerto Rico, 105 in Canada, 40 in Mexico, and the rest warehouses are in Iceland, UK, France, Spain, Japan, Korea, Taiwan, China, and Australia. Costco has two main revenue sources, membership fees and merchandise sales, including both in-store merchandise sales and e-commerce sales. If you want to shop at Costco, you will need to become a member first. You can sign up to become a Gold Star member by paying $60 per year or become an executive member by paying $120 per year. Each membership lets you add one more person in your household. In the most recent fiscal 2022 Q1 quarter, Costco had 62.5 million households and 113.1 million cardholders. Renewal rate was at 91.6% in the US and Canada. Worldwide renewal rate was at 89%. If you look at this here, you can see Costco's membership fees are around 2% of total revenue. In comparison, merchandise sales are 98% of total revenue. Here's the important part you want to know. If you look at this financial here, you can see Costco's membership fees contribute the most operating margin for Costco. The main reason is that Costco passes most savings to members and earns a very small gross margin from selling items in warehouses and its online stores. For example, in the past 2 years, Costco's gross margin from merchandise was only 11%. Costco's strategy is to focus on selling a small selection of items that have very high sales volume and high turnover rates, so Costco can negotiate better pricing with suppliers and offer lower prices to members. This strategy lets Costco grow its paid membership base consistently every quarter. Many Costco members are willing to pay an annual membership fee of $60 for the Gold Star membership or $120 for the Executive membership because they can save a lot more shopping at Costco every week compared with other retailers and wholesale clubs. If you have shopped at Costco before, you will notice that almost all the items are cheaper than other places because you generally buy many items in bulk when you shop at Costco. So what is Costco's biggest competitive advantage? Costco's biggest competitive advantage is its cost leadership. This cost leadership economic moat is explained in this article from the fifth person here. Costco's emphasis is on selling only inventory that have high sales volume and rapid turnover and holding not more than 3,700 stock keeping units SKUs in their warehouse compared to Walmart's 29,000 to 142,000 SKUs. Having $145 billion of cost of goods sold in 2020 coming from the sale of 3,700 different items gives Costco the upper hand when negotiating volume discounts with suppliers. Furthermore, since Costco's inventory flies off the shelves with a cash conversion cycle of no more than 6.7 days in the past 10 years, the wholesaler can take advantage of early payment discounts. Typically, it's 2/10 net 30 days. This means that Costco will receive a 2% discount on their purchase if they clear the invoice within 10 days. To get the best prices, Costco cuts out the middleman and purchase directly from the source. Goods are delivered straight to their warehouses or are consolidated at one of their depots before it gets distributed to Costco warehouses within 24 hours. Everything is stored in their no-frills warehouses. If you're a dividend investor, you will want to know this. Costco currently has a forward dividend yield of 0.58%, which is a very low dividend yield. In comparison, Costco's biggest competitor, Walmart, has a forward dividend yield of 1.59%. This means Costco is likely traded at a large premium compared with Walmart. But to be fair, Costco has a much higher revenue growth rate than Walmart. Costco also has a history of paying special dividends in addition to its regular dividends. For example, Costco paid a special dividend of $10 per share or $4.4 billion in December 2020. This special dividend was the fourth special dividend in the last 8 years. In terms of financials, in the first quarter of fiscal 2022, Costco had $13.5 billion of cash equivalents and short-term investments, which are more than enough to cover all its short-term and long-term debts of $7.5 billion. This is from Morningstar. You can see Costco had very consistent revenue growth, operating income growth, and operating cash flow growth in the past 3 years. Here's the important part that shows Costco is one of the best defensive dividend growth stocks. Costco's business still did well during the pandemic in 2020 because everyone still needed to buy groceries, fresh food, and essential household items in stores instead of buying them on Amazon and other e-commerce stores. This is why you can see Costco's revenue and operating income were not impacted in 2020. Of course, past performance does not guarantee future results, so let's talk about Costco's biggest long-term growth catalyst. I believe Costco's first main growth catalyst is the increasing number of paid members and total cardholders every quarter. I have gathered this total cardholders data from Costco's annual reports. You can see Costco's total cardholders worldwide had been growing very consistently in the past 11 years. This is from macrotrends.net. During the same period, you can see Costco's revenue had also been growing very consistently during the same period in the past 11 years. Going forward, I believe Costco's paid members and the total number of cardholders will continue to grow for many years because Costco has a huge cost leadership competitive advantage, selling its items cheaper than other retailers. Most Costco members choose to become Gold Star members or Executive members because they shop at Costco almost every week and because they can save much more shopping at Costco than at other stores. Costco can offer lower prices than most competitors because Costco only sells around 4,000 items that have very high sales volume and high turnover rates compared with all other retailers such as Walmart. For example, Costco warehouses carry about 4,000 SKUs compared to the 30,000 found at most supermarkets. Management said this in the recent earnings call. I can't think of any company that has the buying power per item that we do because we do are roughly 200 billion in sales with 4,000-ish items versus anybody else that's doing it with hundreds of thousands of items or 50,000 items. but I think that having higher levels of sales productivity, particularly in things like fresh foods, helps your margin. Because Costco only sells around 4,000 items and Costco always buys in large volumes from suppliers, Costco can negotiate much better pricing with suppliers compared with other competitors. Costco sells its items in bulk and sells them in no-frills self-service warehouses. This helps Costco reduces its merchandise costs and warehouse operation costs. Costco buys products directly from manufacturers, therefore cutting the middleman to save costs. Then Costco ships its products directly to its warehouses or ships its products to its depots for consolidation before redistributing them to the nearby warehouses. Costco often sells inventory before it needs to pay suppliers because most of Costco's products have high turnover rates. All these things combined give Costco a huge cost leadership competitive advantage and acclimate moat. In my opinion, I believe it's very hard for competitors to copy Costco's business model, to have very high sales volumes in fewer items like Costco, and to offer lower prices than Costco. The only company that I believe can compete with Costco is Walmart. This is why I believe Costco's paid members and the total number of cardholders will continue to grow for many years, especially when Costco is opening more locations in the international market that will attract more new paid members. I believe Costco's second long-term growth catalyst is obviously international expansion. At the time of making this video, Costco has 828 locations worldwide. Costco has most warehouses in the US and Canada. If you look at this financial here, you can see Costco earns the most revenue in the US. Costco's international markets revenue and operating income are as large as its Canadian markets. Costco's international expansion will continue to be a large growth catalyst for Costco going forward because the international market, in my opinion, is not fully saturated yet. Personally, I believe Costco can open many more locations in Europe, Asia Pacific, and Australia. Over the next 10 years, I believe we will see many more Costco locations outside of North America, which will increase both merchandise sales and membership fees for Costco. According to the most recent earnings call, Costco opened 8 new net warehouses in Q1 fiscal 2022 and is planning to open an additional 19 new net warehouses in the remainder of fiscal 2022. This means Costco is expected to open 27 new net warehouses in 2022, not including the warehouses that are relocating. Here's the important part you want to know. This is from the most recent annual report. We believe that the most important driver of our profitability is increasing net sales, particularly comparable sales growth. Comparable sales growth is achieved through increasing shopping frequency from new and existing members and the amount they spend on each visit, average ticket. This table shows the average sales per warehouse over a 10-year period. This column shows the number of new warehouses opened each year. Over the past 10 years, you can see Costco's average sales per warehouse have been growing consistently almost every year. To be fair, Costco's average sales per warehouse did decrease in 2015 and 2016. This is a good trend because it shows Costco tends to have growing average sales per warehouse in most years. In terms of risk, I believe Costco's biggest risk in the short term is inflation risk that affects all retailers and wholesale clubs, including Costco. As of now, the US inflation rate is near a 40-year high. The latest US CPI inflation rate is at 6.8% at the time of making this video. A high inflation rate is a huge risk for all retailers and wholesale clubs, including Costco, because a high inflation rate will lead to higher cost of goods sold, higher material costs, higher supply costs, higher labor costs, higher shipping costs, and higher operating costs for Costco. Higher inflation costs will eventually lead to higher costs for consumers. As of now, most consumers' salaries are not increasing as fast as inflation in North America. If the high inflation rates in the US and in the international market continue to last longer than expected throughout 2022 or later, it may impact Costco's gross margin and average sales per warehouse going forward. Costco's management has done an excellent job managing its merchandise prices, cost of goods, labor costs, supply chain issues, shipping costs, and port delays in the recent quarters. But a higher inflation rate, in my opinion, will eventually force most retailers, including Costco, to increase its merchandise prices. The risk is that if Costco increases its item prices too much because of the high inflation rate, customers may not buy as many items from Costco as before. Another scenario is that Costco may need to reduce its gross margin instead of passing higher costs to consumers. Management said this in the recent earnings call. There have been a variety of inflationary pressures that we and others are seeing, from labor costs to freight costs to higher demand to container shortage. and port delays to increase demand to certain product categories. Much of what you see and read out there, various shortage on everything from chips to oils and chemicals still supplied by facilities hit by the Gulf storms a while back, higher commodities prices. For Q1 2022, and talking with our merchants, senior merchants, we estimate that overall year-over-year price inflation to be in the 4.5% to 5% range. That's a little bit higher of an estimated inflation rate that I discussed a quarter ago, but I think pretty consistent with what you read out there. We have always said we want to be the last to raise the price and the first to lower the price, recognizing there's a limit to what we can do based on these cost increases. First and foremost, I think because of our relative purchasing power and our relationships with our vendors, we with our suppliers work to mitigate those increases in any way, shape or form we can. Ultimately, that may include us taking a little less markup and maybe them taking a little less markup. There's no complete consistent answer throughout, as you might expect. Costco's second biggest risk is obviously competition. As of now, Costco's biggest competitors include Walmart, Sam's Club, which has a very similar business model as Costco, Target, Kroger, BJ's Wholesale Club, and Amazon. Costco also competes with many local retail stores, supermarkets, gasoline stations, regional wholesalers, and online retailers. I talked about this earlier. I believe Costco has built a large economic moat known as cost leadership. Costco does not compete selling all types of merchandise like Walmart. Costco sells only around 4,000 items that have very high sales volume and high turnover rates. In comparison, most large retailers and supercenters sell as many as 30,000 items or more. This gives a huge competitive advantage for Costco because Costco buys items in large volumes from suppliers and can negotiate much better pricing with suppliers than other competitors. Let's calculate Costco stock's intrinsic value to see if it's overvalued, fairly valued, or undervalued now. I always use this intrinsic value calculator here to calculate a stock's fair intrinsic value. If you want this calculator, you can download it in my Patreon blog in the video description. Here are the key assumptions. First, I define Costco's intrinsic value as its future cash flows discounted to the present day. The discount rate is 7%. This is slightly higher than the 6.3% cost of equity calculated by Finbox.com. If you want to be more conservative, you can always use a higher discount rate here. Costco's most recent fiscal 2021's free cash flow is $5.37 billion. Costco recently released its Q1 fiscal 2022 earnings, but it has not released its Q1's free cash flow data yet at the time of making this video. Based on the two growth catalysts I talked about earlier, I believe Costco's free cash flow will grow at a compound annual growth rate CAGR between 12% and 18% over the next 5 years. Then I'm assuming Costco's free cash flow will grow at a compound annual growth rate of 10% afterward. To calculate the terminal value at the end of year 10, we're using both the perpetual growth model and the exit multiple model here. Then we take the average of both models to calculate the terminal value. There are 3 case scenarios in this intrinsic value calculator: the worst case, the normal case, and the best case scenarios. Let's go over these 3 case scenarios. Under the worst case scenario, we're using a compound annual growth rate CAGR of 12% over the next 5 years, and then we're using a CAGR of 10% afterward. If we forecast Costco's free cash flow to the next 10 years and discount the free cash flow to the present day, Costco's intrinsic value should be around $199 billion for the entire company, or $450 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 15% over the next 5 years, and then we're using a CAGR of 10% afterward. If we forecast Costco's free cash flow to the next 10 years and discount the free cash flow to the present day, Costco's intrinsic value should be around $226 billion for the entire company, or $509 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 18% over the next 5 years, and then we're using a CAGR of 10% afterward. If we forecast Costco's free cash flow to the next 10 years and discount the free cash flow to the present day, Costco's intrinsic value should be around $255 billion for the entire company, or $575 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Costco's fair intrinsic value should be around $511 per share at the time of making this video. This means I believe Costco is overvalued at the time of making this video. Now, just to compare, Morningstar estimated Costco's fair value to be much lower at $391 per share. So will I buy Costco stock? Yes, I will buy Costco stock once it becomes undervalued. I like Costco because I believe it's one of the best defensive dividend growth stocks. I believe Costco has a large cost leadership economic moat. As of now, I do not have Costco stock in my growth stock portfolio, so I'm waiting for Costco to become more fairly valued or undervalued first before buying the stock. Based on my estimate, I believe Costco's fair interest value should be around $511 per share at the time of making this video. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. Make sure you always do your research and do your extra due diligence first before investing in anything. It's important to always invest in what you know and not speculate. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over $1 million. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.